Leading Japanese financial institution SBI Holdings recently confirmed the launch of its cryptocurrency exchange, which is called Trade. The initial announcement about the development of the platform and expected launch was made 15 months earlier, which was back in 2016. Japanese financial giant revealed in its recent announcement that they will be focusing on trading XRP at the beginning. Meanwhile, there were no precise timelines stated for the future development directions of the platform. However, it will reportedly soon be supporting Bitcoin Cash, BCH, as well. As known, SBI Holdings earlier partnered with Ripple and is currently jointly operating the company SBI Ripple Asia. The aim of this company is to explore the uses of Ripple's blockchain in foreign exchange and money transfers among banks. The recent official announcement also informed that XRP/JPY trading will be possible to perform on the platform with no transaction fees. Users will reportedly be charged upon retrieving Japanese yen in the form of withdrawal fees. Currently there are 20,000 pre-registered users for whom the platform will be available at launch, while wider public will have an access to the exchange only next month, in July 2018. Back in September 2017, platform's launch was postponed based on the statement by SBI on further need to strengthen its cybersecurity safeguards prior to launch. The well-known delay by SBI was announced a month after the infamous theft of NEM tokens from Tokyo-based cryptocurrency exchange, Coincheck, which was reportedly worth $530 million. SBI, which is Japan's biggest Bitcoin exchange, later invested in Bitflyer. The company further on in March, announced about having a 40% ownership in Taiwanese crypto hardware wallet developer Coolbitx. Although the information has not been confirmed, this partnership was forecasted to aim at using Coolbitx's cold wallet technology by SBI in order to store customers' crypto assets. Bitcoin is not the panacea to solve the problems that people thought it would, Brad Garlinghouse, the CEO of blockchain startup Ripple, told CNBC in an interview that aired Tuesday. Ripple is a San Francisco-based company that is developing a network for faster global financial payments. XRP is the digital token that financial institutions on the network can use to transact quickly. The currency and the company were founded by the same people. XRP is traded on cryptocurrency exchanges and one is currently worth 65 cents. Garlinghouse, who emphasized that Ripple is independent of the XRP token, said Bitcoin will have a role in the future, but not one that will see it solve major problems, such as becoming a global currency. I think it's, Bitcoin, not going to be the panacea that people once thought it would be, where it would solve all of these different kind of problems. Instead, you're seeing specializations of different kind of ledgers, different kinds of blockchains, Garlinghouse told CNBC at the Money 2020 FinTech conference in Amsterdam, Netherlands. He explained that the Bitcoin blockchain, the technology that underpins the cryptocurrency, is quite slow, whereas XRP transactions are 1,000 times faster. The average transaction time for Bitcoin was 42 minutes as of Tuesday, according to data tracked by blockchain.info. XRP has a transaction time of 4 seconds, according to Ripple's website. While many see XRP as a rival to Bitcoin, Garlinghouse said it's not necessarily a case of one digital coin versus another. Well, I don't really think about it as one versus the other. I mean, it's actually unfortunate, I think, that there's some people in this, the crypto space, the blockchain space, for them, it's almost a holy war of one versus the other. I don't look at that at all. I think that what we're seeing is the overall growth of this space and there will be many winners, he added. Bitcoin is the world's largest cryptocurrency by market capitalization. In another recent interview with CNBC, Garlinghouse said that cryptocurrency prices are influenced by Bitcoin, but that could soon change as people realize the differences between different digital coins. Elsewhere, Ripple has been hit with a class action lawsuit by a person who allegedly lost money buying and selling XRP. Ryan Coffey claims that Ripple violated U.S. securities law. In 2013, Ripple Labs created 100 billion of the XRP coins in existence. Ripple owns about 60% of those 100 billion XRP, some of which are owned by the blockchain's founders. The lawsuit alleges that the founders earned massive profits by quietly selling off this XRP to the general public, in what is essentially a never-ending initial coin offering, ICO.
We, as one participant in the XRP ecosystem, we use XRP as a tool to fund that real-time liquidity. So we're one of many participants, and we're not the only.
Have a lot of XRP.
We do own a lot of XRP. So some of the earliest participants in the XRP ecosystem, the creators of the XRP token, granted 80% to Ripple, the company, with the idea that a company would be able to focus and invest in to build out that ecosystem more effectively. So Ripple today owns about 60% of XRP. We continue to use it in ways for various incentives to drive that ecosystem. We've announced a number of different programs around the world, ranging from accelerator programs to get customer adoption. I compared this when you and I were speaking earlier to PayPal would put $5 in your account or even more.
Well, Visa have been known to fund bits of marketing here and there and now and then, spend quite a lot on marketing. So it's not unsurprising that you're able to use that for those things. But let's get to the function it actually serves for liquidity. If I now have this asset that's native to this shared ledger, in other words, we're on a network and there's an asset that's native to that ledger, everything effectively between all of the counterparties on that ledger becomes a buck transfer.
Correct.
So it happens real time and immediately. I've got this digital asset that can only be in one account or the other. It's almost as if our Nostra Vostra is auto-reconciled with almost a bearer instrument, which is getting really nerdy, but it's Money 2020, let's do this. So have I understood that right? Is that how it works?
Yes.
So do I have counterparty risk against any organization if I'm holding XRP?
No.
So it is more like it's more like a commodity in that sense.
That's exactly right. I'll describe it simply, and I know we're at Money 2020, but I think it's even here useful to understand. If I am, and I'll use a payment provider like Western Union. If I am Western Union, I hold a euro today, and I want to enable liquidity in a Mexican peso. I can sell my euro, buy XRP. That takes fractions of a second. I can move the XRP to a digital asset exchange in Mexico, like Bitso. That takes about 3 seconds. I can then sell the XRP and buy Mexican pesos.
Does that not scare some banks, though, that have this sort of, cryptocurrency is evil type of...
I mean, the answer to that is yes, but I also think that's an example of the misinformation that exists out there. If you think about it, once I explain, I spend a fair bit of my time talking to regulators around the world about, how we are using this, because Ripple has been relatively unique in that we are not trying to disrupt governments. We're not trying to disrupt central banks. We're working with governments and with central banks. Once you explain to regulators, customers, and say, the scary part of the crypto isn't really scary. You're going from a KYC account in euro denominations to a KYC account in Mexican peso denominations, both regulated endpoints. You're not circumventing any regulation. Each transaction is being checked for AML, various acronyms that many people at Money 2020 know well.
So do you think then that banks will get more and more comfortable with XRP over time? Is anybody actively live using XRP that is a regulated bank that you could give as an example to the audience of there is a business case here for using this stuff?
Well, so we've publicly shared that we're working with a number of payment providers. I think we've announced 7 different payment providers using XRP today. Names like Western Union and MoneyGram that are piloting this and demonstrating. We're seeing a savings between 40 and 70% compared to their existing cost structure. So when people ask me, are banks, not just payment providers, going to use these technologies? I usually start with just banks are capitalistic organizations. If you can give them a better product at a lower price, the question would be, why wouldn't they use it?
Well, I wonder if there's something about the comfortable existing environment in which you have these flow monsters who control the major currency pairs and the major corridors. What is their incentive to change?
Well, the flow monsters, using your word, yes. Many people ask me, well, wait a minute, I thought banks make money from these transactions. And that is true. However, it's a very small percentage of banks that sit at the top of that oligopoly.
Yes.
And there are banks that, some of them you used to work for, HSBC or Citi, some of the biggest of the big, Last year, I think Citi's profits from cross-border transactions as one of the largest liquidity providers on the planet was around $6 billion US. That's real money. Now, that's coming from other banks. Other banks are paying Citi to enable their liquidity, to take advantage of Citi's very broad nostro-vostro relationships, such that they can fund liquidity into Mexico or Argentina or the Philippines.
So if we could get to the point where XRP is something that we could imagine our compliance team signing off on, and we could get the regulators there, which I think is arguably starting to happen, the next question comes like, isn't this a very centralized network? Like, why are you using DLT in the first place? Why are you using blockchain? Like, if it's just Ripple I'm buying the product from, and Ripple are the people operating most of the network, surely then you might as well have just built Google payment system, right?
Right. Well, back to the difference between XRP, the XRP ledger, and Ripple, the company. The XRP ledger is an open source technology, and we don't control it. Ripple is a vertical company building upon that XRP ledger.
You say you don't control it, but you run most of it, right? And is that ever going to change?
Well, we already don't run most of it today. There are more and more validators that run across the network.
Jargon check. Validators?
Validators are the kind of infrastructure for how the XRP ledger verifies transactions. One of the big differences between the XRP ledger and a Bitcoin ledger is the idea of proof of work as opposed to consensus, which I'll maybe gloss over for simplicity. The big difference there being kind of driven by power consumption and the ability to scale very, very, I think I said earlier, an XRP transaction is about 1,000 times faster than a Bitcoin transaction and 1,000 times cheaper than a Bitcoin transaction.
Pretty good going. So if we're in a position now where, okay, we can see that the compliance teams might sign off on it, and it's arguably not as centralized as it used to be, how do you incentivize people to start working with this technology? I think you had an announcement about academia.
We do have an announcement today, which we haven't yet shared publicly. Ripple is announcing today that we're working with 17 universities around the world, and we're contributing $50 million to fund the development, to fund the research around blockchain technologies. These universities range from right here in the Netherlands, University of Delft, as well as in London, UCL, Princeton, University of Pennsylvania, Wharton, and we're working with these universities around the world to not just further what we're doing with XRP, but really the entire ecosystem. I think Ripple has tried to foster a dynamic where there are going to be many different solutions in this space, and all boats can rise. By contributing $50 million to these 17 universities globally, we think we can continue to build towards that.
I think that's an interesting tack that I'm seeing a number of large organizations now that have had their own digital asset make some money now go and launch a fund. We saw Binance and several others have started to do the same. Sort of what do you see coming out of these sorts of initiatives with academia and the accelerators? Is this really to grow an ecosystem around it, and is it just for small companies, or can anyone get involved?
Well, I think you're seeing any company get involved. I mean, it is very broad, I think, at this point. And I think the reason for this is what we talked about earlier. We're at the almost embryonic stage of an entirely new platform. And, some of the technologies we talk about today, I think in the future, we'll think about them the way we think about TCP/IP or SMTP. And these are technologies that fundamentally enable a whole bunch of different kinds of transactions. And I think all of those across the board can make our global financial system far more efficient. And frankly, one of the things I get excited about is when we talk about these payments, the people who are taxed the most for remittances are the people who can least afford to pay it. And so when I think about what Ripple's technology is enabling, is it's exposing people in unbanked community to solutions that they can actually start to afford and participate in the global financial ecosystem.
If anybody hasn't seen it, look up Mojaloop, a really interesting project done by the Gates Foundation, working with telcos in, I think it's in the sub-Saharan African region, trying to work with Interledger Protocol, which I think is sort of an open source protocol that you guys kind of put out into the open and said, let's get the interoperability between these telcos working, and then someday later we'll think about if Ripple makes sense. So you find yourself in this interesting world with kind of one foot in the crypto asset space, with one foot in financial services. But it's fair to say, looking at the last report that came out from yourselves, I think it was Q1, $170 million made from selling XRP. Arguably, once you guys sold it, it was then on secondary markets in sort of crypto asset exchanges and cryptocurrency exchanges. Can you see why a bank might look at that and go, well, if I have to use this ledger and this asset, am I going to have price stability in this asset? Is it being sold to retail investors? And not that you guys are doing it, but is it being sold to them? Is there a challenge there that you think? And how would you kind of overcome that?
Well, I think one of the first misinformations that I often overcome when we're talking about how XRP can be used. There's something going on back there.
Yeah, no, like XRP can be used. Well, let's get down.
Is this idea of, hey, there's too much volatility for it to solve a real banking problem. And it turns out that there's more volatility risk using SWIFT over that 180,000 seconds than there is using XRP over 3 seconds. And the reason is because volatility is a function of both time and volatility. And so while XRP is clearly more volatile than fiat today, it doesn't actually have the volatility risk over it because it's so fast. So I think, again, it's one of the pieces that I think is often misinformation, that it's not a real factor right now.
Which is a solid answer. And then the optics around, yes, you've committed publicly and transparently disclosing how you're selling all this XRP you were gifted. But if that's, should mom and pop be buying XRP, or is this for professional investors?
We are focused very much on solving an institutional problem. I think from the earliest days of Ripple, we've looked at, our core customer is a bank. You and I talked about earlier, one of the most prominent kind of events we attend each year is Sibos.
Yeah.
And Sibos is, I'm sure Money 2020 knows well, right? And, we're trying to solve that institutional problem. Clearly, you have speculative interest in what people are doing across the XRP ecosystem and others, and so they want to participate in that. We care about liquidity. The most important thing for us as we think about the success of our products is the liquidity that, if you're going to use XRP and there's no liquidity between XRP and a Philippine peso, well, that's a problem. So we think about how do we enable liquidity, working with market makers, bringing institutions to bear to really get that flywheel moving. It benefits from both institutional capital as well as the speculator that participates. I will also just digress briefly. I think it's interesting to note that 2 years ago, the crypto community was really talking a lot about, the usage of anonymous transactions for enabling drugs, what have you, in Silk Road. Today, we've actually come a long way, and now we're talking about the speculative interest. Now, on one hand, I wish that we could keep going to that, hey, let's solve real problems for real customers. We're getting there. We've come a long way from Silk Road.
It's a long way in front of us as well, I'm sure, but it's really interesting that this is kind of all starting to come together with your announcement today of funding academia, because maybe that professional researcher piece has kind of been missing. But we're up against it on time, so before I let this audience go, and thank you, would you remind us where we can find out more about Ripple and yourself?
Ripple.com is probably the best place to find it. As I said, the announcement we made today with academia, there are 4,500 job openings today on LinkedIn using, in other words, blockchain or crypto. We think this really is the workforce of the future, and we're excited to be able to work with universities around the world to catalyze that.
Garlinghouse, CEO of Ripple. Thanks
very much.